Everyone keeps telling you two completely opposite things about buying a home in the East Bay right now. One camp says the market is crashing, wait it out, prices are about to fall off a cliff. The other camp says rates are never coming down, buy now or get priced out forever. Both of those stories are wrong, and both of them are costing people money, either because they are waiting on a crash that is not coming or panic buying something they never actually vetted. Here's what's actually true in August of 2026. Inventory in a lot of East Bay markets is still running well below where it was a couple of years ago. Mortgage rates are sitting at just under 7%, and homes that are priced correctly are still landing multiple offers, sometimes well over asking. And homes that are priced like it's still the peak of the frenzy are sitting for months. That is not a crash, but it's not a frenzy either. And there's something in between that most of the noise online is just not explaining to you correctly. If we haven't met yet, I'm Jenn Collins. I help people buy and sell homes and figure out where exactly they want to live here in the Tri-Valley and throughout the East Bay. Most of the people we work with are relocating, upsizing, downsizing, or just trying to make a smart move without regretting it later. And that's exactly what this channel is here for. So today I want to walk you through what is actually happening if you're buying in the East Bay in 2026, the things nobody is telling you straight, and how to use all of it to your advantage instead of getting stuck on the sidelines. So let's jump in. The lazy headline right now is that the East Bay housing market is finally crashing. I get why that headline gets clicks, but when you actually look at what is happening city by city here in the East Bay, that is not the story. Prices in some pockets have softened a little. Inventory has ticked up in others, but this is nowhere close to 2008, and treating it like a crash means that you might sit on your hands waiting for a discount that never actually shows up, while somebody else buys the house that you wanted. I get it. Headlines like that spread because fear is more compelling than a story with nuance. A slow, complicated rebalancing does not get the same clicks as a crash, but you are not making a decision for the internet. You're making a decision for your own life, and that decision deserves the nuanced version, not the clickbait version. So the real question is not, is the market crashing? The real question is, what is actually true right now? And how do you use that truth to make a smart decision instead of an emotional one? Truth number one, more inventory does not necessarily mean more choices. Here's the first thing nobody explains clearly. In some markets, you'll hear that inventory is up, meaning that there are more homes for sale than there were just a few years ago. That's true in some East Bay markets. But more inventory does not automatically mean more good choices for you. Just imagine 10 homes come on the market in your target neighborhood this month. 3 of them are priced realistically and get snapped up in the first 2 weeks, sometimes with multiple offers. The other 7 are overpriced, and they just sit there, getting stale, price reduction after price reduction. If you're only scrolling listings on an app, all 10 of those homes might look the same to you, but an agent who knows the market can tell you which of those 10 are actually worth writing an offer on and which ones are sitting for a reason. More inventory is only useful if you know how to read it. Here's the number behind this. In a lot of East Bay markets right now, inventory has been running roughly 25 to 30% below where it stood a year or 2 ago, even with the recent uptick. That means the wider headline of inventory is rising can be technically true and still leave you competing hard for the well-priced homes, while the overpriced ones drag the averages down. Do not let a headline about more homes on the market talk you out of moving quickly on the right one. Truth number 2, a rate just under 7% is not a reason to wait forever. Mortgage rates right now are sitting at just under 7%, and I know that number feels rough compared to what we experienced during the COVID market with rates in the 2 to 3% range. But here's the truth almost nobody says out loud. Waiting for rates to drop significantly is not actually free. Here's why. When rates do come down, and eventually they will move, a lot of buyers who have been sitting on the sidelines come off the sidelines at the exact same time. More buyers competing for the same homes pushes prices up. So the math you're actually doing is not waiting for a lower rate. It's waiting for a lower rate, but then paying more for the house because everyone else has been doing the same thing. If you can afford today's rates, I do everything you can to buy now. Enjoy your new home and hopefully the appreciation that comes with it. Then refinance when rates do decline, whenever that is in the future. This I know for sure. I know many more people who wish they bought earlier than those who were disappointed in buying when they did. If you're feeling a little more hopeful right now, good, that's the point. If you want the full breakdown of financing options and what a realistic monthly payment actually looks like in today's market, call or text me at the number in the description and I can connect you with one of our wonderful lenders that we work with. No obligation, no commitment necessary, just getting answers to your questions. And if you're buying anywhere in the East Bay, Danville, Alamo, San Ramon, Walnut Creek, Dublin, Pleasanton, or beyond, our team would love to sit down with you for a complimentary buyer strategy session and map out your next steps. Start by downloading all of our buyer resources right here. And if your search is taking you outside of our direct area, anywhere else in California or anywhere out of the state, we have a vetted referral network of agents we trust completely, people we'd send our own family to, and we'd love to connect you with them. Okay, let's get back into it. Truth number 3. The 20% down myth is keeping people out of the market for no reason. This might be the one costing East Bay buyers the most opportunity. So many people think you need 20% down to buy a home here, so they don't even start looking until they've saved a number that feels almost impossible on a Bay Area income. Here's the truth. For a lot of conventional loans, you can put down far less than 20%. Where it gets more nuanced here in the East Bay specifically is that most homes in our market cost more than the conforming loan limit, which in Alameda and Contra Costa counties in 2026 is approximately $1.25 million. Above that number, you're typically looking at what's called a jumbo loan, and jumbo lenders often want to see somewhere between 10 and 20% down, sometimes more, depending on the loan size and your financial profile. The only way to know your actual number is to sit down with a lender, not guess based on what you heard from a coworker. Just imagine a buyer targeting a $1.4 million home. If they assumed a flat 20%, they would think they'd need $280,000 in the bank before they can even start looking. But depending on their credit and reserves, a lender might actually work with them at closer to 10 or 15% down on the jumbo portion, which could mean qualifying with well under half of what they assumed they needed. That gap between what people assume and what is actually possible is keeping a lot of genuinely qualified East Bay buyers sitting on the sidelines for no real reason. Truth number 4. Home sitting longer is not the warning sign you think it is. Here's the last truth, and this is the one I want you to remember the most. Homes across the East Bay are taking longer to sell than they did 2 or 3 years ago. If you only look at that one fact, it sounds like trouble. It is not. It means that the market is normalizing after a genuinely unusual few years, not that something's broken. Just imagine you're watching a home that you like sit on the market for 3 weeks instead of getting snapped up in the first 3 days. Your instinct might be to assume something's wrong with it. Sometimes that's true. But more often right now, it just means that buyers finally have enough time to do proper inspection, negotiate normally, and not waive every single protection out of pure panic and competition. A slower pace can actually work in your favor if you know how to use it instead of treating it as a red flag. So here is what all of this means depending on your specific situation. If you've been sitting on the sidelines waiting for a crash that fits the scary headlines, I want to gently push back on that plan. The data doesn't support a crash scenario in the East Bay right now. It supports a market that is slowly rebalancing in favor of buyers who know how to shop it. If you've been holding off because you assumed you needed 20% down, go talk to a lender this month, not next year. You might be a lot closer to ready than you think. If you're worried about buying at a rate that feels high, remember that interest rates fluctuate. If you can afford the house with today's rates, you can refinance later if rates drop, but you can't undo missing out on a home that fits your life. And if you've been passing on homes because they've been sitting for a few weeks and that felt like a red flag, go back and take a second look. A slower listing right now often just means a fair shot at a normal negotiation, not a hidden problem. I hope this video has helped you understand we're not in a market crash, but it's not a frenzy either. It's a market that rewards buyers who actually understand what is happening instead of reacting to headlines. More inventory only helps you if you know which listings are worth chasing. Waiting for lower rates is not actually free, and the 20% down myth might actually be keeping you out of a market that you can afford right now. If this video was helpful, and I hope it was, hit the like button, subscribe to our community, and turn on your notifications so you don't miss the next one. And if you know someone who's been frozen on the sidelines waiting for a crash, send them this video. I'm Jen with the Jenn Collins Group, and we help people make smart, confident moves here in the East Bay, whether that's next month or a year from now. If you're planning to buy or sell your home in the East Bay, I would love to guide you through the process. Call or text me at the number below to schedule a complimentary, no obligation strategy session. Thanks so much for watching, and I'll see you in the next video.